G'day, it's Andrew from Aquila Property Investment. I'm going to talk to you today about the Brisbane property market. A lot of people have tipped it over the last 12 months to boom. I guess in short, that hasn't happened. There has been some growth in Brisbane, certainly, but it's been sitting around the middle of the pack with Sydney and Melbourne ahead and Adelaide and Perth behind. And look, there's three main reasons why I believe that's been the case. The first of those is population growth. Population growth hasn't been nearly as strong as Brisbane is used to and has had in the past. And in particular, it hasn't been strong amongst interstate migrants. Now, they're the people that will generally come in and buy property. Clearly, population growth amongst babies doesn't create a big demand for property. So the lack of interstate migrants moving to Brisbane has taken the heat out of the Brisbane market. This has largely been because of a lack of jobs growth in Brisbane. Now, Brisbane's only created around 8,000 jobs in the last 12 months. To give you some context, that's about half of what the Gold Coast has created, and the Gold Coast is around a quarter of Brisbane's size. So without much population growth and jobs growth, there hasn't really been the demand for property to really push it into the same kind of realm as Sydney and Melbourne, where population and jobs growth has been higher. So the last factor has been issues of oversupply. Now, you would have probably seen a fair bit of commentary by now about the risk of apartment oversupply in Brisbane and Melbourne as well, and Sydney to a lesser extent. And the fact is that is based on some pretty hard evidence now. Some of the numbers that we're looking at here are quite staggering. In some suburbs, we're looking at 5 to 6 years worth of usual sales coming in just this year. So the apartment market is a real problem. It will be a drag on unit prices over the next 1 to 2 years and potentially beyond. So that's been another factor that stopped Brisbane from really booming like a lot of people have predicted. The good news for Brisbane is that the growth that has occurred has been quite sustainable. We've seen most of the growth in the detached house market within the inner to middle ring of Brisbane. So we're looking between about 8 to 20 kilometres out from the CBD. The demand to supply fundamentals there have been quite strong. Properties still remain quite affordable. Most of the activity we're seeing is in that sort of 450 to 650k price brackets, which, if you look at how interest rates are currently positioned and you look at incomes in Brisbane, most people still see property in that kind of price bracket as being affordable. So we're seeing reasonable growth in those categories, somewhere between sort of 3 to 9% depending on the suburb. Best performers sitting up around the 9 to 11% mark. So growth is definitely still there, and the conditions for growth remain. Supply is still limited in these pockets. Each suburb is different, and you need to do your analysis to make sure the suburb that you're looking at purchasing is a good one. But within the bracket, the 8 to 20 kilometre bracket that I've talked about, you're looking at around sort of 3 to 6 months worth of supply on the market in most suburbs, with strong demand driven by incomes and interest rates. So those kind of areas we think will perform well over the next 12 months. Have a read of the article. It's got some more detail and some specific suburbs to look out for. And most of all, I'd recommend doing your research in the Brisbane market. There's plenty of pitfalls, particularly with so much new supply coming on in certain areas. So do your research and get some independent advice if you need it.